We're here to talk about Petredec, which is a leading shipper and trader of LPG. Established in 1980, you guys have a tremendous track record in terms of performance, both in terms of the trading side and also on the shipping side. You also have a slightly unique business model that has been very successful over time. Since you've been a private company, I think a lot of people in the industry, they really have heard a lot about you. You're well regarded in the industry, but you're also being quite private. So I'm sure a lot of people are keen to learn more during the interview today. Very pleased to have Jonathan Fancher, CEO of Petredec Global, here on the stage today. Also very happy to have you here in Singapore because you recently relocated back.
Thank you.
For the second time, so welcome back to Singapore. And look forward to having a conversation around the future of LPG shipping and also Petredec as a leading industry player.
Thank you very much. It's nice to be here. Fully cognizant that I'm what's in between drinks and lunch, so bear with us for a few minutes, please. But thank you for your time.
Petredec, you're currently the second largest VLGC owners. You have 21 modern ships on the water. You have 6 dual fuel new builds to be delivered in 23. Again, you're a major trader of LPG with an outstanding track record in terms of profitability. I'm getting back to this integrated model, which I think is really interesting, and I would like to talk a little bit more about. Can you tell us a little bit more about the unique model you have in Petredec in terms of trading and shipping together, and explain why that has been so successful and also important for you up until now and also for the future?
Sure, with pleasure. This fully integrated model that Joachim is referring to is something that is extremely important to us, and it's something that we've been cultivating for the better part of a decade. It all started with a thesis that our belief is that there is no other part of the barrel that is as interlinked between the trade and the transport of cargo as VLGC shipping an LPG product, thus making it one of the most shipping-centric product trades in the world today. When we say fully integrated, what are we talking about? What goes into this is perennially one of the largest physical trading platforms in the world, year in, year out. Access to large, flexible offtake agreements in the parts of the world where LPG is in supply in abundance and cheaply. Sole access to structural shorts, price inelastic shorts that are in emerging markets such as the Indian Ocean. As Joachim mentioned, the second largest fleet in VLGC, of VLGCs, and maybe more importantly than that, control of our own ships for our own trade when it suits us. And then sitting above that, one of the largest derivatives platforms year in, year out that is constantly extracting margin out of the inefficiencies and price dislocations that take place. So when you put all of that together, it really becomes something more than the sum of the parts. And we don't really look at ourselves as a trader or a VLGC ship owner, but more of an LPG value chain company.
Thank you. Jonathan, you've been with the firm for about 10 years. You've had multiple roles. Can you tell us a little bit about how the business has been evolving over those last 10 years?
Yeah, sure. I would say that if you go back 10 years, when I began at the company, Petredec really was a very successful trader with shipping interests and some shipping assets. Over the last 10 years, we've really evolved into more of a ship owner with a trading department that trades around the assets and the product that we transport on those assets. Again, not really a ship owner or a trader, but a logistics optimization company, a margin extraction company, that we do so through our use of what we think is more closely represented by floating pipeline infrastructure as opposed to a ship owner or a trader.
Thank you. I mentioned you have a very modern fleet. You also have this dual fuel new building program. How do you see that, impacting your positioning in the marketplace, and also how do you see LPG as a marine fuel going forward?
I'm lucky enough to work for owners who have always looked at the energy transition or what's coming from the perspective of tighter regulations around the environmental changes that are coming, and looked at that not as a hindrance, but really an opportunity. If you look at the age profile of our fleet of 4 years, it's by far the youngest in the space. Having the youngest fleet within the VLGC space is something that is a mission that we absolutely never compromise. It got mentioned in the previous panel a second ago, the emergence of a two-tier market. I'm sure we'll talk about the order book for new builds and VLGCs in a minute, but irrespective of the conversation around that and the argument of whether or not there are enough or too many VLGCs going forward, one thing that we're 100% confident in is that there aren't enough new age, next generation dual fuel ships in the market. So being able to participate there, being able to invest counter-cyclically during the downturns of COVID, we believe has put us in the best place possible to compete in that two-tier market.
Makes sense. I think we can all agree that LPG is offering a very exciting growth story. There's also been some concerns around the growing order book, for the segment. How do you see this all play out, from a supply and demand perspective? I think it's also interesting for the audience to get your perspective, because I think compared to, for instance, LNG, LPG is less researched, less understood. Please.
Sure. For sure, if there was one thing that we could potentially change, it would be a better lobbying of LPG in the world and its place in the energy transition. But, if you asked us what would be first on our Christmas or shopping list, it's a stable, strong crude in excess of the marginal cost of production in the United States. We always look to the United States as the starting point for our ability to establish our view on product. And going back to the interlinking comment earlier, we, as this integrated company, use our product view to get our view on shipping and vice versa. We find it very difficult to imagine having one without the other. And if you look to the United States, no one ever goes out and drills for LPG. It's a byproduct of other oil and gas production. And the important stat associated with that is since 2013, since the beginning of really the shale gas exploration in the United States, LPG production has grown at a rate or a multiple of 1.7 of that of other oil and gas production in the United States. So when we talk about the order book, it's important to smooth out the idea of this order book of 46 or 47 ships in 2023. They're not all arriving on the 1st of January. If you say that a ship delivering in October is worth 3/12 of a ship, the order book in 2023 actually looks more like 21, 22 VLGCs being delivered over the course of 2023. Going back to the production in the United States, some stats have increasing production and exports out of the United States being 7 to 8 million tons next year. Well, you need 4.7 VLGCs to lift every 1 million tons of LPG being exported, incremental tons of LPG being exported out of the United States. So when you approach it like that, and then you look at the versatile, multi-use nature of LPG, not just industrially, but residentially and from a retail perspective, coupled with the fact that it is an extremely, extremely resilient product. If you go back 10 years, there were 4 to 5 VLGCs being exported out of the United States every month. Now there's anywhere between 80 and 90. That resilience, the ability to make it, once you make it cheap enough, it finds new uses in abundance. makes us not really nervous and quite constructive actually about the VLGC market going forward.
Very, very good. In terms of consuming markets and geographies, are there any particular markets that you are more excited about in terms of demand going forward? Obviously, LPG has a strong story around emerging markets, which we will touch upon when it comes to ESG later on. But any thoughts around the most important markets going forward?
For us, the residential demand and LPG's ESG story going forward in emerging markets, especially around the Indian Ocean. Approximately 1/3 of the world's population does not have access to clean cooking. LPG could play a very large role in changing that. 60% less carbon than wood. Wood takes up 10 times the amount of kilograms to cook annually in a home as LPG does. Of course, it has a big industrial usage, and if you make it cheap on a relative basis due to the substitution effect of naphtha for naphtha, that demand will be there as well. But going back to the ESG side, that's where we see the growth that's important to us. Hence why you see us securing and having greenfield projects and creating long-term structural shorts in South Africa, in Mauritius, recently in East Coast India as well.
Yep. No, I agree. I think it's an area where LPG has a very direct impact, on people's life, and that's very powerful. A follow-up question. So what are the key advantages of LPG in terms of other energy sources when it comes to transportation and storage? What are some of the key features,
Especially in these parts of the world, we find it to be interesting just because it is so transportable. The infrastructure required for LPG in these emerging markets is not that of some of the other emerging energy transition arguments that are taking place. You can also transport it for a long period of time without any sort of energy slip as well, which I think is important when comparing it to other options.
Yep. Obviously, earlier this year, you announced that you are considering an IPO in Oslo, and that's something that you have been exploring. I'm sure people are keen to hear, what are your latest thoughts around that? And I think maybe before we talk about that, I think probably people want to know why is this a natural step for Petredec, given that you have a very private history, you've been also very successful as a private company. So what is sort of the thinking in terms of doing this transformational step for the company?
You're absolutely correct in the private nature of the company's history. A couple of years ago, we started to amass a position in Avance Gas and eventually grew that up to being 17% owner in Avance. One thing that process taught us, I guess, or made us more comfortable with is the idea of participating in the capital markets. It's not something that the company had ever done, and as you said, has always been quite closed off. However, throughout that process, getting more comfortable in Oslo, in New York, in the capital markets that largely we're attracted to in this process, it really made us look at our own integrated model, and through conversations with potential investors, with banks, really got more comfortable with what we had to offer being of interest to the capital markets. Now, we said from the beginning that this was always going to be a price-sensitive exercise for us, and you go when the capital markets kind of allow you to go. So our having not done that yet, or having not entered into a more official listing is, I think, more of a not an if but when scenario, I would say.
Yeah, that makes a lot of sense. Beyond the listing, or maybe first, so obviously you decided on prioritizing Oslo for listing. As a Norwegian working with DNB, I have to ask you, why Oslo compared to other venues? You could have picked some other venues, obviously, as well.
Yeah, and this being a complement of Oslo and not a comparative statement at all, but I'd say that just the investor-based knowledge there is there's such a rich and deep shipping history and investor-based knowledge there. It was very comforting to us, and was kind of a logical. It was a logical place for us to start in the process, for sure.
Very, very good. Glad to hear that. Looking at the longer term, also beyond the potential IPO, what are the growth plans and ambitions for Petredec?
It's a good question. Going forward from here, the scale and the youth of the fleet of Petredec and the model that we have with our physical and derivatives platform, our growth plans have happened over the last 3 years. We used the downturn in asset prices. Protecting against inflation has been huge for us over the last few years, and using that approach and counter-cyclically investing into new steel, new types of technology within the VLGC space really allowed us to get our company and our integrated model to a scale such that going forward, our story is not growth. It's returning value to shareholders in the form of cash dividends as opposed to being a growth vehicle.
Very good. Jonathan, thank you for being with us today.
Thank you for having me.
Sure.